Hello, everybody. Good to see you. My first time up here. I've been down there the whole time, which is pretty cool. So, how's everybody doing? You still awake? You still with us? Great presentations today. It's been a good day. It's been a good week. So, I feel like I'm way far away from you all. Well, hi, everybody. My name is Jay Nathan. Nice to meet you. For those that I haven't met, I'm the Chief Customer Officer at Higher Logic, also co-founder of the Gain, Grow, Retain customer success community, which many of you are a part of. Thank you. And we've got a fantastic group of folks here with us today to talk about making an impact in the boardroom. The themes just seem to fit together today. Kristy this morning, we had the gentleman from Box who touched on some of these leadership themes. Nils, I'm sitting here looking at him in the face. So many great themes around leading from the front and how we tell the story and how we support what we're doing with our board and get the investment that we need. We're going to talk about that with some folks who actually spend a lot of time in board meetings and in the board setting. So I'm going to do quick introductions for y'all just so we can make this go quick. We got 30 minutes, so we're going to fly, and we want to keep some time for Q&A. So go ahead and start thinking about your questions. But I'll start with Kristy Muir. Kristy is an operator. Former operator who's now gone over to the venture capital side. And she's
the dark side. The
dark side, the light side. But Kristy is here in the Utah area and with Pellion Ventures. So has successful exits, done a lot of work with private equity firms, so very interesting perspective. Kory Knell is a good friend of mine. Kory and I worked together at Rain Focus, but also he spent time in investment banking. He was on the dark side, I guess, and then went over to the light side, and now he's an operator. He's SVP of operations at Rain Focus, which is here locally as well in Lehigh. And then Eugene Lee is with Omer's Ventures, background in investment banking. He's sold a company to Google, so that's a pretty big deal. Pinterest, Copper. This guy's on the board of Clue, WorkRamp, Postal.io, Falcon. So some great logos here, right? Great names. So thank you all for being here to do this today. What we're trying to do is we want to focus on, as leaders, we either oftentimes are in board meetings ourselves as customer success leaders, or we're helping put together the content and the story that is going into the board meeting. So what we want to do is talk a little bit about that perspective and get a perspective from what the investors are looking for, what our owners are looking for from us as customer leaders. So we're going to jump into a few questions here and sort of go around the table. But Kristy, why don't we just start with you? What are investors looking for from us as customer success leaders in the boardroom?
So I think first, I had this realization over the past couple of weeks when I was an early stage founder. And one thing I wish I would have known is how much the board, advisors, venture, how much they need us. They need you. And you are the one driving. So I would say the first thing they're looking for is for you to establish yourself as the expert. You are the expert. They are not. They are looking to gain knowledge from you. And I think that establishing yourself as that expert first is probably the most important thing you could do.
And Kory, does that go even on the maybe later stage side of things with private equity, who are usually typically later into a company, right?
Yeah, that's what I was going to say is you got to pay attention to the situational setting of what you're trying to accomplish and what the board's trying to accomplish. Depending on the size of the company, in the early days of a company, you may have a small board. You got some founders and some investors. As the company matures, you're going to bring on some specialist people with big relationships, and the different board compositions can be interested in different things. So, having spent a lot of time preparing board decks, and one of the things I think that's really key is we'll go directly to the board. Hey, what are you guys interested in? What specifically do you want us to report on and discuss in the meeting, and that way we can come well prepared. I think the other thing is in these board meetings, you don't want it to be a reporting session. So we get the materials out way in advance, let them read it, come with specific questions. We get their questions ahead of time, and then you can make those meetings as efficient as possible.
Yeah, how do you even decide? Does the board decide what metrics and what information need to go in a board deck, or is that something that, in your experience, the executive team will decide? Yeah, go ahead, Gene.
Yeah, from our perspective, it's iterative. I mean, I think there's some standard metrics that you want in every board deck. I mean, I think it's the usual suspects. NDR is obviously one that we look at very, very closely. I just want to touch on one point that Kristy said on like what to expect or what we look for in the boardroom from a CS leader is really the voice of the customer. Like we want to be confident that you know everything and almost everything about the customer and what it represents from, you know, a product perspective, how they're using the product, everything and above. I think that's first and foremost for us.
Yeah.
Can I synthesize
Yeah,
a
go
couple
for
of
it.
things? I love both of those comments, and I think that, you know, per the question of what metrics, I think that that's where you have the opportunity to establish yourself as the expert. You know, NRR, GRR, CSAT, NPS, it's all of the standard things. And to your point of not making it a reporting session, your job is to draw insights. The board doesn't care about the ground level view. They care about what Eugene said, voice of customer, the insights and what stories you can tell. You know, if you're looking at gross retention, you have a pandemic happening, maybe you did an NPS. How do you synthesize that information and tell a compelling story to the board that will help provide them with insights at that kind of 100,000 foot level view to make more intelligent, you know, decisions for the business?
One of the things too, along the metrics front is, you know, are there standard metrics? Who decides on that? One of the things that we try to do as we're going into these, you know, earlier stage companies and trying to mature them is we try to come with an end in mind first approach. Like, how does the outside world look at, and we do, it's all software. How does the outside world look at software companies? How do they value them? What metrics drive those valuations? And we got to build our systems and our data and our analytics around those things that the outside world's going to be judging us on. And it's not the type of thing that you can just, you know, show up and wing. You actually have to be like talking about it every day within the team. And, you know, I think, you know, those metrics, if you start with that first, that'll put you in a good spot. And then the situational stuff, if you're worried about, you know, CSAT, retention, scalability, stuff like that, you're going to have other things that you may diverge off to focus on that. But really starting with how does the outside world, you know, value your company is a good place in terms of determining metrics.
One of the things we talked about as we were prepping for this, what a board is always looking for when it comes to increasing the size of a company or growing a business and figuring out how they're going to exit that business ultimately, because that's what a lot of investors are going to be doing in your companies and the companies we work for, is trying to figure out if there's market risk or if there's execution risk, right? And so we have a pretty unique purview into what's happening in the market, in the companies that we're serving, right? Because we get to interact with these people every day, all day. So that's really helpful insight, right? For investors to know, okay, do we need to invest in up-leveling our team here so we can execute better? Market's there for us to take, or do we need to actually go search out for different sources of addressable market, that kind of thing? So do you have those conversations with your companies, Eugene? Yeah,
all the time. I think one of the things that has come up in the most recent quarters, given the market conditions, is, you know, there's always a slide on your customers and who's at risk, and on really understanding the reasons. Going to your point, Jay, of like market risk or execution risk is just understanding the reasons why our customers are churning and what are we doing to mitigate those reasons.
Yeah, Kristy, I think, go ahead. Oh, geez, I'm not good with the microphone. I'm like bobbling it. Go ahead, Kory. I didn't mean to talk over.
I was going to say, like, one really good exercise you can do is go get your hands on a diligence list, either from an investment banker or a private equity group. Take that list back and do a run through and see which of the data points you can produce. Because the thing is normally, you know, and at JMI Equity, so, you know, it's growth equity. So think of, you know, investing in a $20 million company, growing it to 100 and exiting. So in that kind of window there. But if you can get your hands on a diligence list, what they're asking for is not just the most recent data. They want 3 to 4 years of financial and operational data, right? So in order to produce, you know, tight, good quality data for 3 to 4 years, you got to start now and get that stuff prepared and ready to go. So, you know, get your hands on a diligence list, compare, you know, where you are currently, and try to march towards that as an outcome.
I would echo that. I think that's actually a really great advice, a diligence list. I think that background in operations and then reporting to a few different global private equity groups, having to go through the process of diligence helps you understand the business to a depth that you would not otherwise. And being able to pair that data with, hey, I was just on the phone with, XYZ customer, it's the biggest customer, and here's what they're saying, paired with that data, you're the only one that can deliver that.
Well, one of the most freeing things that somebody ever told me before my first board meeting that I had to sit in and report out in, my COO told me, hey, look, and you mentioned this earlier, Kristy, he said, the board doesn't know anything about this business when it really comes down to it. They know what the metrics look like, they know what the data looks like, but you're here to teach them something, right? And so it sort of goes to your point, that story is really, really, really powerful. So just for clarification for everybody, can you explain a little bit more about what a diligence list is and who they might talk to in the organization to grab that? Go ahead, Kory.
Yeah, so the question was, what is a diligence list?
Yeah, what is the diligence
Yeah.
list?
Yeah. So
Exhaustive.
exhaustive.
It's
yeah.
a long list. Yeah.
It's it's a proctology exam of your business, essentially.
Quotable quote of the day, right?
Yeah, so it's going to be a list of requests from, if you're running an investment banking process or an investor or credit process, of all the things that they're going to want you to produce on your business. And there's going to be legal elements in there, corporate elements. There's going to be functional, department, operational data, financial data, customer data. And they're basically going to want you to produce all this. And just to be full transparent, one of the criteria that either the bank or the investors use as a measure of your operational excellence and your quality as a company is your ability to produce that data for that diligence list in a timely, sufficient, effective manner. So if they show up and give you that list and you're scrambling around and you're piecemealing the data and we don't have this and we don't have that, it's a pretty clear indicator that you don't have things buttoned up as a company. And I personally, I'm curious what you guys think. In my perspective on the investor world, there's been an education and an increase in sophistication around two areas. One is technical debt. So if you have technical debt, it's a real investment, and the investors are going to ding you on your valuation because they know they need to invest in that. And the other one is operational debt. And there's a real investment that has to take place in order to level up the company. So you can get dinged on the valuation of your company. And we're talking about, in our world, $50 million, sometimes more in terms of, the discount that you can take from having operational debt. So these diligence lists are actually a measure on the perspective of quality of the company.
Yeah, so I'm going to answer this in a slightly different way, because Kory's diligence list, I think, is more catered towards probably growth, equity kind of diligence lists. We invest in super early stage companies, Series A, Series B, where you're definitely not going to have the exhaustive list as Kory has. You might not even have a lot of data to begin with. So what we're really looking for is, if you have the data, great. We always ask for customer data, by MRR, ARR, some revenue metric. If you have some sort of engagement, product usage data, we'll always ask for that, because what we're trying to do is cohort your data. And do we understand, and really do you understand who's using your product, why they're using it, and we can kind of glean some of that from the cohorts. But then for us as early stage investors, the diligence is aligning on vision, customer, go-to-market motions and stuff like that.
I sort of have contrarian advice. How many of you have Google on your phones right now? Google Diligence List, you should become familiar with this, take it as homework. At the end of the day, though, we're the ones that have to do the diligence. Your job is to show up and demonstrate competence and build trust. Should you be able to speak to all of that? 100%. Will we trust and verify? 100%. But at the end of the day, I think it's a great exercise. Your job is to demonstrate competence and build trust, though.
Yeah, the only last point, you need to teach us, the people who are doing diligence, because ultimately we need to sell our own partnership or our own fund the reasons why we should do this deal. And so it's kind of, I think the best diligence processes is our partnerships, where it's not just data requests after data requests. We're really trying to learn how we're going to work together and so on.
That is a really good point. One of the things that I learned about investors is that they're selling too. The investors are selling too. They want you to take their money. They're selling you their money because they need a return on that. So everybody's sort of selling something, right? But I like your point about it being a partnership, and it's really the first step in a longer partnership. So let's turn to maybe some more specifics on what a board what do board materials need to look like? And we all have systems now. We have technology that will let us produce, charts and pie graphs and histograms for days and days, right? But is that too much? Is that overwhelming? When is that relevant? All the customer health information, the NPS data, the CSAT, like when is that important versus all the, maybe the standard financial metrics that we would look at? So Kristy, you want to lead us off on that one?
Yeah. So there was good advice given to me once. It was be brief, be brilliant, be gone. I think that one of the biggest mistakes I made early in my career was talking too much. I think that it's your job to be able to go down the rabbit hole if the board asks you to go down the rabbit hole. But don't make the mistake of going down the rabbit hole before they've made you do it, because that will just open a can of worms. And so typically when I would go to a board meeting, typically I would have an appendix. And if you have friends who are senior executives, ask them for their decks. I have friends that have shared stuff with me. They've taken out proprietary information. But I would ask around and see what your friends are also doing. I think within that, though, the information typically, again, I really tried to provide high-level insights. I tried to show them identified gaps, risks, concerns. It's really an opportunity to identify risks and demonstrate competence to then advocate for more money for my team, your team, whatever it is that you're needing. And then just let them guide you, though. They will ask if they want to ask.
Yeah, I think that's a great point, Kristy. I feel like one of the themes that's coming up here is, the evolution of the company life cycle. It's different for young companies versus later stage companies, and it's great that our panel, we have a diverse panel of us dealing in those. One of the things that we try to do in that growth, stage of a company's life cycle is we try to, we have a 3 to 5 year plan, and then we have an annual plan, and then we have our kind of quarterly plan. And for the board meeting, we try to match our initiatives and our metrics tied to those annual objectives that we're trying to accomplish. I feel like one of the things that is a mistake sometimes is that people will show up to the board meeting and they'll report per department. And you're doing everything you can not to have silos in your company. And when you report everything siloed per department, you lose the ability to get alignment on what is the overall goal and objectives that we're trying to accomplish this year. So what we do is we structure our board decks on those objectives and what is everybody doing in each department to contribute to those objectives. And then we report to the board on the updates of our initiatives and our metrics that are tied to that. And that's probably not what happens in an earlier stage company. That's in that growth stage. That's how we go about it.
Yeah, you just hit on a hot button issue for me because, the department by itself means nothing, right? If you're not in the broader context of the business. And Sterling just talked, I don't know if he's still here, but from Divvy just literally spoke on that same topic a few minutes ago. Yeah, absolutely. So when you think about, we have outcome metrics, of course, which are usually financial in nature, but what's a useful leading kind of metric that we could include that would be helpful and when, to your point? I like what you said a minute ago. I was taking a note. I want you to say it again before we leave, but be brief, be
brief, be brilliant, be gone.
Okay. All right. So, but what else, when do you dive into the next level and what does it look like?
When they ask.
Yeah.
I think like very sincerely, it is your job to be the expert, and I think it's apparent when somebody's not the expert. I will say that. When we start asking questions and you start probing and prodding and somebody can't answer, we pick up on that. as do I'm sure your employees, your manager, like it becomes pretty apparent. So it is your job to be the expert and go as deep as you can with the data. But I think that really I let people guide me down that rabbit hole.
Yeah, what advice would you give us? If you don't know an answer, what's the best answer you could give in a board meeting if you don't know?
If you don't know the answer?
Yeah, if you don't know the answer. You can't give an answer.
I don't know the answer.
I don't know the answer, but let me get back to you. Or I've said I would hate to speculate. I would hate to speculate. I think that's a really professional way to say it. I would hate to speculate because we can always make up answers and pull it out of our butts. But I would hate to speculate. Let me get back to you.
Yeah. Okay. That's good. Awesome. So what I've asked each one of these folks to sort of think through one tip to leave you with. So I hope you guys have your homework done. Kory, you want to go first? What is the one tip that you'd leave with the group here? Practical takeaway.
So I think for me, the thing that I see, I spend a lot of time prepping these board decks, doing the follow-up, all that kind of stuff is, in a lot of companies I've been in, people will drop everything they have and they'll take a whole week to prepare materials for this board deck, right? That whole week that you're preparing is time lost on the business. And so if you can be more proactive, and I know not everyone here is in a seat to guide this, but you can talk to the people who are, be more proactive about matching what's discussed at the board level with actually how the business is being managed, right? So the metrics that you're using to manage the business to make better decisions, those ideally should be the same ones you're talking about at the board meeting. Don't create two different work streams or two different worlds. Like use the board meeting as a way to improve the management of the business, not a way to report in a disparate, distinct way to the board. That would be my biggest takeaway.
That's really, really valuable.
Yeah, I've got a couple. One, form relationships with your board member. Board member doesn't have to just be board member to founding team. It can be to the exec team. So form those relationships. That leads to, hopefully they know about the business. The second tip would be like no surprises. Hopefully you're giving updates along the way. They should know everything. And my last one is in the board meeting or outside the board meeting, ask for help. Like that's part of our job as board members is to provide help. So send us on a homework project or ask us a question that you need help with, put us on the spot. We hold you accountable. You should hold us accountable as board members as well to do the work.
That's a really great idea. I mean, you have to remember that board members are usually working with a lot of companies who are in similar stages and ages as your own. So they might have a resource to connect you to that's dealing with the same exact problem that you're dealing with, right?
I would echo that too. We typically don't overextend in offering help unless the portfolio companies ask. That's great advice. I think that I just earlier this morning actually I had the opportunity to. There was a global, really powerful businesswoman that I had the opportunity to sit down and talk with, and there was another young woman there. She's 21, starting her career, and she asked both of us. She was like, "What advice would you give me?" And I think I said something cliche like, "Give yourself grace," which that's not cliche. It's really important to do that, right? But this woman who was visiting, she said, and it really struck me today. She said, "Live your personal brand because the world is a really small place." And that was really profound coming from somebody who's a global citizen, traveling the world and just hearing her speak to the size of how small it is and how important it is to have authenticity to yourself and living true to your personal brand.
That's very good. And I would say this world, as you all know in this room, is very small, right? I mean, we think there are thousands and thousands of software companies, but you're connected, right? We're all connected to these people. So well, this is awesome. We have about 5 minutes left, so I think we're going to open it up for some questions. So, all right, I'll run around and do the microphone thing since I'm facilitating here.
This is loud. Hello, everybody, if you weren't awake. This was super helpful. I am somebody who presents to the board all the time. We have a monthly update meeting, a quarterly board meeting. Our decks are like 100 pages long. So, you know, I'm just being honest. One of the things that's always going through my mind is, you know, my boss is the CEO, his boss is the board. What can I do as a CS leader to make my CEO's life easier with the board? That's question one. The second question is more of a fun one. What in the hell goes on in the closed meetings when you kick the CEO out? That is all.
You mean the executive session? Yeah, I'm curious about that too. So go ahead, Kory.
What happens in the executive session? Is that, okay, so let me think of the most common topics. So one is a leadership assessment. So you can't have your CEO in the room to talk candidly about that. So that's one probably. The second one is any their legal issues get talked about in there. The CEO, your CEO is not on the board, huh?
He's in the first closed session, but then there's another closed session that he doesn't join.
Okay. Usually the CEO is in the executive session, so I don't know that one.
We do executive sessions without the CEO.
Without the CEO?
Yeah.
Okay. So I haven't seen that as much, just because of the makeup of our boards.
Yeah, there's two closed sessions. He stays on after all of us leave, and then they kick him out, and they have a meeting after him.
Okay. So then the other one I was going to say is just the other one that we have in ours is basically like, where can we help the business? You know, what do we need in terms of either leadership, resources, consultants, that kind of stuff. And then, you know, depending on the makeup of the board, like in our current company, we have 2 investors in there, and both of them have consulting teams to them. So they're, you know, trying to figure out who from each group would be the right one to go to that. So those are some examples.
I think your first question, though, asking what you can do for your CEO, I think a theme of today, from what I've listened in, has been like a revenue team, or looking at CS not just as success, but as CX and, you know, impact on the entire organization. I think how you can help the CEO is make sure, you know, that you're liaising with the other departments and that you're presenting a unified front, a unified story, that what you're speaking to is speaking to other departments. I think that is really beneficial.
Hi, my name is Knell. I'm with a startup. I have one customer. It's me, myself, and I, and a sales team. So my question is, being asked to prepare something for the board to show, is it the process of how we're going to approach when we scale, or is it the end result and the goals that we're working towards that's more critical? Because I feel like surmounting both for me is very overwhelming. Maybe one or the other would be easier to try to attempt.
I mean, you can go high level on the end goal. I mean, they should probably be already aligned on what the end goal is. I think what's important for us is the process. What's the plan for the process? And then ultimately in subsequent conversations, how are we going to continue to iterate and learn on the process? Because the end goal is probably going to change if we're being real. And then I just want to touch on one point on the executive session. Like for our executive sessions, without the CEO, a lot of it actually is aligning with the board. If we disagree with what the current strategy is, that's probably just been presented in the board. Or maybe we don't have that conversation because we're already aligned. And then we always pick one board member to deliver if it's not so good news to the CEO, and how we can motivate and push the team. And then for your first question around how you help your CEO, don't do 100-page board decks. So.
Hi, my name is Luciana. I'm from Brazil. So I'd like to know how you decide the company valuation and how the customer KPIs can improve this valuation.
How you determine valuation? Yeah.
I mean, for valuation, what we're looking at right now is obviously growth rates year over year, but from a customer success perspective, it's net retention and going through those cohorts. So if your cohorts are getting better, your earlier your earlier cohorts are stable, growing, your newer cohorts, going down are getting better, like that's a huge plus for us, and that will ultimately translate into your overall metrics, which will help your valuation.
It's a great question, my favorite question so far. So you have basically companies are either valued on revenue multiples or EBITDA multiples, right? So anything you do to drive top line increases that, or later stage companies when you're driving EBITDA, so efficiency on the services and support side, all that kind of helps on the bottom line percentage, right? So those are the big ones. There's also two metrics in particular that we pay attention to in terms of summary level metrics that correlate to valuation. One of them is the rule of 40, if you guys have heard about that. So that's the combination of revenue growth and EBITDA percentage. And then the second one is net dollar retention. The correlation between valuation and net dollar retention is highly correlated. So, that's, what can you do in terms of retaining your customers up, the net part of retention is the upsell as well. So retaining your customers, also upselling, which comes from keeping them happy. Happy customers buy more. All that kind of stuff helps on those two metrics.
I have a question for the whole panel, but I think, Eugene, this is especially for you. So VCs are very judgmental people. Is that fair to say? It's what makes you good at your job.
Only to you, Chris.
All right. So my question is, this is not necessarily for CS, but when an executive is presenting to you in a board meeting, what are the pitfalls where you immediately write them off as a bad executive? So what are the pitfalls to avoid? Because within about 10 seconds you've judged whether or not this person's any good.
Just think about the first time you met Chris and tell us about it.
I feel like this is almost like a bias question where everybody could have a different answer of what kind of would turn them off.
I mean, the easy one is just preparation, right? Kristy's talked about this a little bit earlier, is do you know your stuff, right? And can you answer the edge cases around that? And it's okay if you don't, but do you really know your business, whether that's CS, product, sales? And I think that's driving confidence. If you don't know that, then your ability to have us have confidence in you is going to, falter. I think it's also the proof's in the pudding in terms of the metrics, right? And so you got to hold yourself accountable to some certain metrics and then come back around and present those metrics in the next board meeting and follow up.
Yeah, it's a good question. One thing I would maybe add is if someone's a good executive, so we have this thing where we ask our executives, what team are you on? And usually what happens is the sales leader will say, I'm on the sales team. And the CS leader will say, I'm on the CS team, and the finance person, right? And the reality is the team you're on is the executive team first, right? And so you got to have alignment there, and you got to put that team first as opposed to protecting, your people or whatever. Be on that team first and be a team member on that team. And in order to do that, you can't be a functional leader. You have to be a business partner to that team, right? And one of the things that that I've noticed is there are people that they're functional leaders, they're not business partners, right? And they're going to do things that maybe benefit their team, but they don't understand the impact on the rest of the business. So a good executive, there's, to Kristy's point, there's a bunch of elements in there, but one idea is just being a good business partner is a big deal.
Think like an owner.
Yeah, I would agree. I would echo both of those. I would say those would be top for me too. I think I'll take a different approach, I guess, since you both covered those, which I would have also covered first. And this wouldn't cause me to think less or judge somebody, but I really hate it when people put themselves down, like self-deprecating. I think women do this a lot. I've done this before, where it's like, oh, I'm so stupid, I forgot this. Or, oh my gosh, I've been so busy with X, Y, and Z, and I don't know. instead of just owning yourself, like you are there for a reason. And I would just say not putting yourself down in front of the board or executive team and just owning your position and what you have to offer.
I love it. All right, we're going to wrap up. Kristy, Kory, Eugene, thank you so much for being here and doing this. And thank you all. So.